I say, how's it? Well, greetings, guys, and welcome to Live Trading Profits. 15 minutes show that we have. I'm just going to move my laptop a bit, get a bit of that's better. Trust you all well. Now, depending on what you trade, we had a pretty good, very dramatic move so far on Hang Seng 50. I want to have a look at that and just talk about some of the things that, some of the opportunities that were there and how we could have traded them. So this is the move from the open. And presently, the market is got this lower high and, pretty tight, pullback here. Strong for the bulls, but the bears, of course, want to sell and accelerate down. But let's have a look at how that took place and whether there's anything on the daily time frame that might have given us an indication. Well, just by looking at it, if you didn't have this here today, if anyone had said to you, we're going to have a huge bull candle on Wednesday, the first day of the month, the largest candle since beginning of January. When this candle has been the largest bull candle that we've had, and completely erased 1, 2, 3, 4, likely to raise 4, maybe even 5 days work by the bears trying to sell. So it is a surprise candle. And what is a surprise candle is a candle that's extraordinary. This candle here would not have been a surprise candle. It's a large candle, but after the breakout above the tight trading range, that would have been, the bulls are very strong, big bull candle, fantastic, but not a surprise because the market is going up. But when the market is going down, you have a surprise candle. Now, before today, the channel that we had, and maybe we'll leave it there, so when we get down to the 5 minute, you can have a look at it. The channel that we had is this tight channel, so bear breakout, pullback, tight channel. We had a failed breakout beneath it, and more often than not, if you really look at channels, when you have a failed breakout below or above, you're likely to have a failed breakout on the extreme. There's a 5 minute measure move I want to just take out. Yeah. So if you get a failed breakout here, higher probability that today or tomorrow we'll get a failed breakout and the bears will try and sell back into the range. And then from there, the market might create a reversal pattern up or down. That's a higher probability. So we're talking 60, 70%. There's always the other side of it, 30% chance that the market is going to do what's not high probability. So the bulls could just continue to buy up. Now, going into the market and into the day today, you probably have been thinking, hang on a second, forget about what took place here. We had a failed breakout beneath the channel. Bulls tried to reverse it to the inside candle. And we have a failed breakout above the bull inside candle. So there's a chance that even if you get a bit of buying, that there will be a little bit more selling that could take place because of yesterday's outside candle doji, etc. The market is at a key level. On this chart, my broker, 20,000. And, it's more interesting also the midpoint of 2022 range and midpoint of the all-time range. So there's a lot of forces here. Bears want to break beneath, bulls want to accelerate up. So when you get to the 5 minutes for the day. So this is what the day has presented so far. Now, it always looks wonderful, isn't it? After the market is moved and say, oh man, I should have done X, Y, Z. But let's have a look at it. So from the open, you had a little channel here. Okay. towards the end of the US session, and the patterns at the end of the US session are always important to give us insight as to what could possibly happen at the open. So we know that most initial moves at the open, at key events, the open, red news, surprise candle, any key levels, most moves, the initial moves fail and the market tries to do something different. So gap down, market had closed up here, gap down, tried to go up, good for the bulls, and then failed all the way down, became a decent enough high test candle for the bears. So at that point, you've been thinking, hang on, so this is possibly good for the bears, for the bears, not bears, for the bears, because that's, remember that channel line that we saw, and you're thinking, well, maybe the bears are strong enough to come back into the channel line and continue to sell. But the second candle was an inside candle, because there is a high of the first candle, there is the low of the first candle. So the second candle is an inside candle. Now, if you are a bull and you're thinking of buying, you'll be saying, hang on a second, this is a higher low double bottom. We tried to break out beneath the channel and we failed, and we back within the channel. It's an inside candle. It's a higher low, but I don't want to buy as yet. You could just buy that, you can always just sell if you want to put a huge stop, or just buy. So, when we talk about the higher probability patterns, we're saying let's wait for things that just stake the probabilities in our favor, so we get stopped out less often. So if you wanted to buy that, well, you'd have to put a measured move stop of the first candle, and then look at any other nearest technical levels. So your stop would have been here, which is fantastic. It's just below that level. Best to wait and see if the bulls give you acceleration, okay? Because that inside candle can just fail and we come back and we sell off. So when the bulls then did that, now you kind of said the higher low is likely holding. I've already got a reversal pattern at the open. It's a 2-bar reversal, failed breakout beneath the channel. There may be a little bit later on a failed breakout above the top of the channel, or failed breakout above, let's put this level here. So that's a key level from the US session. There could be a failed breakout also above this particular level. So if I'm taking that trade, if I see a failed breakout and a bear candle, then I should be able to exit. Okay, so there's an opportunity for you to have jumped into the market as the market breaks above that level. So first trade would have been here. If you're looking for a swing trade, you might have hesitated a little bit. If you're looking for scalps, just jump in, buy above the bull candle. Buy above the bull candle as the bull candle is the high is broken, right? So you're also buying above here. You put your five points, $10, whatever, above there. And now when you're taking that trade, your stop is a little bit tighter. That's the correct place to put the stop. Now that you're taking that trade, it's above the high of the day, etc. But you may still expect the market to fail. So if you get a failed breakout anywhere in here, which this fourth candle, before you had all of that, okay, so before you had all of that, the fourth candle had a tail on top, and you would have probably thought, oh my goodness, okay, this is failing. Now, you don't exit out of any trade you take going long until you see a bear candle, right? So you would have had to hold on to it, and you'd have taken it, above here. So maybe on that tail, it might have just showed a little bit of a loss, but that's not a problem. Okay, so you got to hold on to it, a perfect test of that big round number. So you're taking that trade, you hold on to it. If you didn't take any of these trades and you thinking that maybe there will be a failed breakout by the bears, there is a failed breakout, but the candle remained as a bull candle. Okay, so the bulls are strong. It's still a bull candle, so you can't short beneath this. If it had become a bear candle, then exit your longs, then short, and work out where to put your stop. That would be perfectly fine. But because we didn't do that, or if you're waiting, when you saw this inside candle, now with all the momentum that you've got, it's a worthwhile trade to take. The problem with taking that trade is your stop is still down here. That's a place to put your stop. You got to put your stop down here because the market might reverse. You could work out at this level. So let's say you can make it up 10 lots. You could then say, okay, my risk here is 10 lots, but if the market starts to come back and takes out that high, that low, or 50% of that, please stop me out. Okay, so you could put your stop, there's the 50% technical level below that candle. Your risk sizing is still down here. Okay, and you say, well, there's a tail here, there's a key level, we might not get through it. So if I'm taking that trade, I'm going to wait. Alternatively, you wait for the market to break above that. Your entry is here, and your stop is still way back down here. So when you now taking the always in trades, when you're saying, okay, I've missed a reversal trade, but the market is now starting to move in my direction, the only thing is you still got to trade small for that first trade, and your stop is still quite far off. But after risk sizing it, you can put it at 50% pullback. Now, this little pullback here and the tail, the market has gone up and come back. So it's a failed breakout above here with an inside candle. Market comes back almost to test the EMA. As it starts to turn, it's showing us that the bulls are strong. That tail, bears try to sell, they fail. So that gives you confidence to take that trade or take that trade. The problem, as I said, the stop is here, but you don't know how far it's going to go, right? At that particular point, you do not know how far it's going to go. We already way past the measured move of the first candle, so other measured moves could come into play. You could look and say, well, there's a key level. We've broken above it quite strongly. How far could the market go potentially? So you could say, oh, maybe they want to test the high of the day. You don't know that they're going to do that, but you have to look at where the market is and saying it's possible the market wants to test that. Well, what took place was that, the bulls just kept on all the way up, buying. I mean, if you look from here, right from the bottom, none of the tails were taken out. This was a pause right at the high of the day, and then market carried on. It becomes tricky to buy here. The only way you could jump in and buy now is if you had like we had this decent pullback, if you had coming back to the EMA and giving you a bull low test candle. That's a higher probability trade because it might just fail above the high of the day. There's a bear breakout level previous, that bear breakout that we saw on the daily. So all areas of possible resistance, but the market just continued going up and up, two-sided price action, but they continued buying until we got to that bear channel, the spiking channel, and the market started to show reversals. So very hard to take any trades in here. If you're going to be taking trades in here, if you're saying market is going up, you got to scale back your risk. Your stop has to be down here. It's absolutely tricky. I would rather just leave it and let it go. Then, just to fast forward where we are, I mean, very strong for the bulls. Is the market likely to come down here? Who knows? What we have is a decent enough reversal pattern. We have a wedge top. We have a lower high. We just had another lower high just before we started the session. So if you're still looking to jump into the market, the best thing at this stage, if you're going to be selling, is wait to see a bear breakout. If we get that, then wait for the pullback. Because if you jump in here, these bulls that are this strong could just keep on buying. So I thought I'll just show that it was, it's not what I had in mind, but it's just a dramatic, first or all the sessions are open now on Hang Seng 50, but really fantastic. And I trust you enjoyed it. If you traded it, fantastic. If you didn't trade it, I think there's a lot of interesting lessons that you can apply to all other time frames. All right, guys, thank you very much. We shall catch up again next week. Or if you're in the coaching sessions, we will see you in the coaching sessions. Cheers, everyone. Bye-bye. Take care.